What up, everybody? Welcome back to Royal Blu FX. In this video, we're going to discuss and talk about if you should be trading wicks and why you should be trading wicks and order blocks. I'm seeing a lot of questions lately about why I'm actually targeting and identifying wicks as order blocks and not an actual order block that we can clearly see with our own eyes, okay? Well, there's actually two ways of identifying order blocks, and I'm going to be showing you in this video. All right, so a lot of you have been taught in terms of how to identify an order block, right? In this case, when price is going bullish, you identify the last order block, which is right over here before price extends and then retraces, and you take the buy, right? Well, that's all good and gravy, right? But what about when price is leaving this huge entire wick before the major price goes up, right? That's another way to identify an order block, which I'll show you in a second, okay? So most of the time when we're looking for our order block, we have to identify that last down candle or last down move, okay? So let's go down here and I'm going to show you how to identify the next one, okay? So right here you can see price is going bullish like this, right? Then it needs to retrace. You can notice that there's this huge wick that has been left by the market, right? And if you just understand how structure and order flow works, you can understand that this is the last down move here, or last down candle before the major move pushes up. Now, I know that in this scenario, you can't find that last down candle, right? But what if I was to tell you that if you were going to, on lower time frames, you'll be able to specify and see and identify that order block inside of this wick, okay? So many times when wicks create, they have a hidden order block inside them. And this is why I target a wick rather than the actual body of a candle like this, right? So if I was to look for buys when price pushed up, right, I wouldn't be just targeting this order block here, right? Because this here has nothing, right? It's nothing to me. What I'm trying to do and identify the last order block, and obviously the last move before the major move pushed bullish, right? Where was that last move? Well, it wasn't down here, that's for sure. It would be right down here in this huge wick over here. Okay, so my intention here is to identify that last move, right, where price hasn't touched and hasn't mitigated before price moved up. So in this case, when this whole wick created, you can see that right down here, we have this as obvious as a scenario right over here for you to see. Oops, right there, that last red candle right there was where that last down candle was moved, right? Now, obviously, there's you can take in consideration like the refining part of order blocks, where if you over refine an order block way too much, right, or over refine an order block, right, there's a potential that the markets may not get to that order block like this, right? It may just kind of stop here, mitigate something, right, and then push bullish, eventually leaving you here with what's called an inducement right over here. Okay, and then you would miss this opportunity to looking for buys. Now, I'm not talking about over refining your order block, but what I am telling you is to identify that sort of last down move or last candle, right, in this entire wick, okay? We can obviously go inside and look for more order blocks within this order block, right, which is considered to be over-refining an order block, but that's not what we're going to be talking about really, about over-refining order blocks or refining order blocks. We're just trying to let you know that there are simply order blocks inside this wick. So wicks are very good, okay? When you see a wick in the markets like this tells us this is a V formation in the market, which means that price has pushed down bearish aggressively and pushed bullish aggressively. So that tells us that the banks have been involved inside and around this area, okay, before the price just shot up. So obviously, what do banks need to do? They need to come in and retrace, right? They got to give everyone a fair chance to come in and buy at a fair value, right? And then once price retraces, right, they come all the way down here to that last area that they just pushed and shot up, and need to mitigate that last order, wherever that last order was. Let's just say it was here, since we are talking about this right now, like this, right? Let's say this was the last order, right? Price comes in here to mitigate the last move, that last candle, okay? And then price starts to shoot up. Now, the reason why they're coming to mitigate this area is because they want to close their last order before continuing price up, okay? So always have this in your mind, right? Whenever you're looking at structure and your, like, let's say your higher time frame, if you notice that there's a wick, a long wick like this, right? And instead of this scenario here with this order block here that you can see very clearly, notice that you can always go and scale down to your lower time frames and to start confiscating this wick right here, right? Starting to understand where that last move or last down move or last major move up to the upside, right? In this case, it's a major move down right over here. You need to find out that last order block, okay? That is the unmitigated area where banks have been involved, all right? The whole scenario behind order blocks is really buying low and then selling high. So you buy low and then sell high. So the bank's objective here is to buy low and sell high. So if they're buying low, right over here where price is overextended, right, what do you think their next objective is going to be? Well, they have to sell high now, right? So they'll sell high and reach and go back all the way down to an area where they haven't mitigated their last order, right? And once they do so, then they push price again, all right? So I'm going to go show you guys now on a real live chart example right now and show you how the scenario works so you guys can all get and understand this scenario. All right, so here we are on a live chart example. We start on the 4-hour, actually right over here. All right, and then we did the liberty to mark out the order blocks just to show you guys this as an example. Okay, right over here you can see where price has been bullish, right? Once prices are bullish, prices need to retrace. So where do they retrace? They retrace all the way back down to this area where there's a wick, right? So notice again, there's a wick here and price reacted very aggressively off of this wick. Why? Because there's a hidden order block in this area. So I'm going to show you guys actually here, if I cut this over here, and then we're going to show you what it looks like down on the lower time frames. Let's go down on the 30-minute. Okay, right here on the 30-minute, you can easily see that there is an order block, right? You can see price was bearish, then price went bullish here, broke structure, and it never came down here to mitigate this last order block. Now, I know for a fact if I do this, let's go right beneath here, that prices will most likely mitigate this area right over here. So now I'm doing what's called refining the order block, right? Let's play this kind of quickly so we can see what price does. There we go. Stop it there for a second. Notice here where I just refined this wick right over here and price came and mitigated that wick, right? Only because that wick was the last order block or the last down move before the major move pushed up right over here, okay? And it came here. Right? What a coincidence, right? Let's do this again. Let's play this right now on the 4-hour. Right now we're expecting for price to get to this area, to this wick, right? Notice I didn't mark out this candle here, right over here, but I marked out this area here only because we had a break of structure over here. And as far as I can see, the last down move before this high left was this area here, which is our sell to buy candles right here. So we marked out this last down this candle here. There's a last down move here before major move pushed up here. Let's go down and look in to see where that order block is down here. Okay, notice over here, right? It is this is the last down candle right here, right? Which is right there. Okay. That touch, this was the last order, excuse me, I can't even speak today. This was the last down candle or order block before price moved up aggressively, right? And has never been mitigated. So now we need for price to come here, right? And notice it's a wick on my 4-hour time frame, right? Let's play this fast. There we go. Price mitigated and pushed up. Now, what if we mitigate this, right? Excuse me. What if we cut this price down and refine it? Let's go down here and see how we're able to refine this order block a little bit better. So now we can see where price is actually really reacting off to. Okay, so let's go over here. There is a wick right down here. All right, right down there. All right, now let's go zoom out and see what happened. Okay, price didn't quite mitigate that area only because, and this is part of the over-refining. If you over-refine an order block, it may not work. But this is as good as I can get it probably from this area, right, to this order block, and then price definitely mitigates and pushes up, okay? Now, let's go to another one. Over here, let's go up. Okay, prices have broken over here, came in, tested this order block here and pushed up, right? Now here you can see this is obviously a wick that that the market's testing. Let's go back down to the 30-minute right over here. Maybe we can even refine it just a little bit better, right? So I want you to see this here. There's a wick right here, okay? This right here is the last down candle. Okay, if we can get price to come down, There we go. Okay, so notice where price again mitigated was this last down candle right before the major move pushed up. Okay, now if I was to try and over refine it, I don't know if this would ever work in terms of this being the last down candle, because if I were over refine it, I could miss this this entry here, and this is why I don't always over refine order blocks. I just let them rest as is, for the mere fact that I don't want to miss the entry, right? The opportunity to ride this this market, right? And I think that was it. As far as the order blocks go. All right, guys, I hope you guys learned a thing or two about wicks being order blocks as well, right? There's two ways that we can identify order blocks. It's either an actual physical order block that you can see on your higher time frame, or a wick. Okay, they both play out just as amazingly as both as they both should. All right, guys, I hope you enjoyed this video. Please throw a huge thumbs up, and also consider subscribing, because we always leave free content. Until then, I'll see you next. All right, so here we are on a live chart example. I took the liberty of marking out all the setups already, so I can show you guys what I'm talking about. Some of you guys might be thinking, okay, well, you cherry picked this. Well, it's because I'm trying to make a point here, okay? So here we go. So once we see this right over here, you can see where there's a chalk made, right? There's your low, there's your high. I want you guys to see the two differences between this low and this high over here. Okay, when you put out your Fibonacci's like this, notice how we're all the way here in our discount area, and we're looking to buy right over here. All right, and you can see price is tapped and pushed bullish here. Now, as far as the less probable trade, why don't you look over here and see what's happening? Price stopped here, right? Retraced and then pushed bullish. And here's all these other traders right over here who tried to take a buy right over here, right? Now, I'm going to give you guys a second and wonder why this trade didn't work out. Why it didn't work out correctly in the market. Have you guessed yet? All right. I'm going to tell you guys why. Well, it's because obviously this is our less probable trade in the market, right? So if I'm looking to take something of a quality, a good trade in the market, why would I ever be looking for buys here, right, when I know I'm in my premium zone and not in my discount zone, right? That's silly, right? And we're obviously in the 4-hour time frame. So in order to now this isn't, now let me just rephrase this. This isn't a bad trade to take, just as long as you know that you're not in your discount zone, right? You can still look for buys here, right? Let's go down here, and so we can show you an example. You can still look for buys down here, although we need to wait to see what the setup is, what setup is actually given to us right here, right? You can see that price was and tapped our demand zone here. You can see that price gave us a chalk here as well, right? You can see it right over here. Chalk to the low side, chalk to the upside, right? And then our high probable setup would be right here. The entry would be literally right here, right? And you can see already there were buyers that try to buy here to push the price up, right? But it didn't perform well. Now, what's interesting about this is the reason why price never went up is, why price never broke above this high or continued to pursue the direction, right, is because this low was not able to break this high, and therefore I wouldn't even look for buys here, right? So that's one of the reasons why I would never be entering at this area. Even if price is retraced here still at this full retracement, I wouldn't be looking for buys because this low here never broke this high. Okay, but that's more. There's more details into that in our course. Let's go back up here on the 4-hour. Okay, let's look at this example here. There was a chalk made here. There was a high, right, and there was a low broken, right? A lot of us would be like, okay, cool. We're on the 4-hour. Buying prices are bullish, right? There's a break of structure right here, right? Our intention is to look for buys. Cool. Not bad, right? But what's bad about this is when people are following this, right, we still haven't gotten to our area, to our full deep retracement, right? Right over there, right? Look at that, right? Now, here's the very interesting fact here. We are in our discount, right? Only because this low here left from our discount area, right? So when we're looking to buy this, we are intentionally looking to buy price at the very low. It's still a break, it's a low, there's a high, there's a low, there's a high, there's a low, there's a high, right? So we are still looking at price at a full retracement, at a full deep retracement at the high probable setup. But knowing that this low here may not perform well, it may not break above this high here, right? Because this was the origin of the low. This is where price should be performing well, right? As far as we know, this is inducement, and there's liquidity. Liquidity created in the market before price taps our order block and continues to push bullish. So we would have this deep retracement as our high probable setup, right? And this would be our the less probable setup here. Now again, just to let you guys know, this does not mean that you cannot trade this. You can trade this, but the way we like to trade this, these less probable setups, is only when price retraces at a deep retracement like this and comes, and then we would look to target sort of our supply or the high of this less probable setup over here. Okay, something like this. But we would never target anything above here. Okay, because a lot of traders also look to hold these trades and then hold them very high here, and then not understanding as to why they are holding it that high when we know price should well indeed come into our demand zone like this, right? So definitely understand what structure you're in and what and what setup the market is doing, right? Let's look at another setup here. You can see prices are bullish here, but then they're going bearish. You can see the chalk here. There's a lot of sellers, excuse me, that sold right here, and you can see it right here. There's your high, there's your low. Price is coming here now, and there's sellers that are trying to sell this off like this, right? Now, again, it's not wrong. You can sell it, but just know that price may not perform well and push bearish here the way we'd like to think the price should go, like so, right? Like you can see how from this high, price went all the way down here to this wick right over here, this low right there, right? The only way this is going to perform very well is if prices fully retrace right to the order block, which is right here, right? And then look for prices to extend like this, okay? Again, you can be on the lower time frames on the 4 hour and still look to trade this right over here, but just as long as we know that we can target only our demand zone now here, right? Or maybe our current low right over here, but we can't trade anything past this, because as far as we're concerned, let's look at this right over here. Excuse me, it's not this, it's this right there. Okay, you can see that this high here, right over here, has went bearish right over here, but then it hasn't really fully. This little wick right here, it's standing just above our premium. So this could be, this is up to you guys obviously to decide whether you should be selling this or not, but I would never sell it here until prices come here to the full high, because you can see it right over here. There's your high, right? There's your low. Okay, before this, there was your high there. There was your low here. Something like this, right? High, low, high, low. So we just follow the order flow like so. And that even rhymed. All right, guys, I hope you guys understood this example. I hope you understand how high probable setups are the best versus the low probable setups. Of course, I don't discourage you guys to continue looking to trade, sort of what is on the higher time frame, like, the 4 hour here, for example, where you're seeing highs like this broken, you're buying like this. This is still okay to buy, just as long as you know what you're buying and selling in the market, right? On lower time frames, this is still great. You can still buy and sell just as long as you know where the market should be going, right? On the full retracement, on that full deep retracement. That is our high probable setup. Guys, thank you so much for watching. I hope you guys enjoyed this video, and I hope that you learned a little bit something. If you really enjoyed it, please throw a huge thumbs up, like on this video, and definitely subscribe to this channel, because we always give out free content every single week. We love you guys. See you until next.